Good morning, SEAL team. I'm coming to you today live from the moon, where I landed after riding that rocket ship that was the NASDAQ during yesterday's meteoric market rally of Wednesday, April 9th. Now, the session saw major gains across the board, with the S&P 500 up 9.5%, the Dow Jones Industrial Average was up 7.9%, and the tech-heavy NASDAQ led the charge once more with a gain of 12.2%. That rally carried over into Asian and European markets, and we even saw yields come down in the fixed income space. All in all, it was a great day to be an investor in the capital markets. We'll take days like those. But we also seek to understand them. What actually happened? It's 2025 and I didn't know stocks could actually still go up. Now, the political and fiscal side of this is mostly in and a constant at this point. I mean, Trump is going to do Trump things. Elon's been brought in to gut government expenses, Silicon Valley style. But even he's been backing away from some of this tariff rhetoric, having had some very choice words for the lead White House representative on the subject, Peter Navarro. It was the monetary side of the equation that moved the needle yesterday. Coming into the week, there had been this worry. If you're putting out blanket tariffs across the board, what do these other nations then need US dollars for? Before that was to buy US goods and services in a global trade relationship. And foreign holdings of US debt are a big worry. If the US does get into a recessionary territory, they're going to want that flexibility to be able to issue debt to ease the pain in the short term. That's that backstop that we had, that started out mostly during the financial crisis. We saw its larger use during the COVID era pandemic. And we wanted to know if that was still going to be the case moving forward. Now, it had been scheduled that the U.S. was to be raising $39 billion in debt with an issue of bonds on Wednesday, the same day of this rally. And all eyes were on that issue. Is there going to be an appetite? Does the U.S. still have the flexibility where there is a demand for that U.S. dollar and its debt? If you don't have that demand, you don't necessarily have that backstop. So contrast this with your understanding of what an investment professional was, because I was up this morning putting together a draft of a comic strip of a bald eagle representing the United States trying to sell bonds and negotiate tariffs with a panda. I also did have a European owl, and there was even a cryptocurrency Shiba Inu in the mix. The theme, though, was, will there be an appetite for US debt? Now, 10:30, I was in the office. We got the notification that the auction had gone live for the 39 bill. And guess what? The rest of the world ate up that debt like hotcakes. That was a major sigh of relief. It sent the market soaring. Right after that, there was the announcement that there would be a 90-day pause on tariffs, except for China. It was news on top of already very good news. Now, will that be the end of this? You know what? I kind of doubt it. Again, we do have the fiscal, the political side of this, but it was a reassuring sign that there are backstops in place. If the tools that got us through 2008, 2009, and the pandemic are to be relied upon again, we do need to make sure that there's a demand for that debt. Now, the market said loud and clear, there's a demand. We'll keep you updated as things progress, and that's all for now. Thank you.